Good morning. This is your weekly update with Jim Stewart. I'm the Chief Investment Officer here at Worth Asset Management. Today is December 19, 2022. I'm going to go over your three threes for the week. I'm going to go over the major asset classes. We had a down week in the market, so I'm going to go over the weekly and year-to-date performance and our top three on a long-term basis, how we are positioned on the equities and the bonds on a short-term basis, and our top three market movers for this week. So let's jump on in.
Okay, let's go over the major asset classes performance on a week and year-to-date basis. The U.S. equity markets finished the week lower as the Fed latest interest rate hike in disappointing retail sales triggered another late of the week sell-off. U.S. Treasury yields fell as recession fears started to hit the global bond markets. The yield curve still remains deeply inverted with the 10-year note at 3.48, while the 2-year note is higher, yielding 4.19. For the week, we have the Dow falling 1.7, the S&P dropping 2.1, and the NASDAQ dropping 2.7. We did, however, have two areas that actually went up. We have the bonds, which is they went up almost 1% at 0.8. And we had commodities coming in at 1.9 on the positive side. On a year-to-date basis, we still only have the U.S. dollar and commodities with the major asset classes that are showing positive results this year, while everything else is still in the red. All right, let's go over the top three asset classes on a long-term basis for December 19, 2022. There was no change this week. We still have the T-bills, dividend equities, and utilities as our top three major asset classes. Looking back 1 year from now, we have the NASDAQ, S&P, and long Treasury bonds as our top three asset classes. All right, let's look on the short-term basis on the bond side. As I said earlier, we have a year-to-date performance down 10.7, the yield at 3.48. However, about 5-6 weeks ago, we started nibbling at bonds. They started to break out slightly, and so far so good. They're up 3.9 since that time. So actually, this is one of the brightest spots in this market right now as the equity markets are kind of going back and forth. Bonds are trending on a higher basis right now, so definitely a positive. All right, let's look at the short term for our equities. As I said, they started off really strong and now they're starting to come back down, and we're still up 4% from the bottom to where we are right now. However, this will be a crucial week to see if we can hold, because it just broke the support zone. So we've got to see it come back up in here and get back up into that range. Otherwise, we're going to go right back to protect mode. All right, let's go over the top three market movers for this week. Number one is housing data. It's a big week for housing data. We have some on Tuesday, Wednesday, and Friday. So on Tuesday, we get housing starts and building permits. On Wednesday, we get existing home sales for November. And on Friday, we get new home sales for November. Number two market mover for the week is the government funding bill. This is the bill to keep the government going through its fiscal year, September 30, 2023. And it's expected to pass Congress this week, but that's after they've started to add a whole bunch of stuff into this bill. They've already added $858 billion for a defense bill and a stopgap spending bill. This is the time of the year where Democrats and Republicans will go in there and add a lot of their legislative wish lists and throw in a whole bunch of stuff in here in hopes that it can pass so they can sneak it in there before the holidays. So they don't want to stay over the Christmas weeks. They want to go ahead and go home with their family. So they try to throw everything in there, like tweaks to election rules, reforms to drug sentencing, more aid to Ukraine, even a ban on TikTok from government-owned devices. Yes, these things are important, but they try to throw all these things in here right at the end of the year. So, government, let's get done what we need to get done. You can wait until January to go ahead and deal with some of these other issues, but I digress. On Friday, probably the biggest market mover will be the personal consumption expenditures, or the PC index, which again is the Fed's favorite gauge. And right now it's looking to be only a 0.2 climb in November, where it was 0.3% gain in October. On an annual basis, prices are projected to have risen 5.5, down from 6%. So that's a positive. They'd like to see it come down a lot more, but at least it's moving in the right direction. All right, that's it for this week. Thank you for joining us. Our next update is Tuesday, December 27th. The markets will be closed on Monday, December 26th, in honor observance of Christmas. So that's it this week. Thanks again for joining us. Continue to follow, like, and subscribe. And everyone have a wonderful, happy holidays and Merry Christmas to everybody.